Well, the gloves are back off between Presidents Trump and Xi in this China trade war, with both sides coming back with blows back to back. So the question, of course, is now what's next for the administration? Joining us now to discuss, former Commerce Department Deputy Director Chris Garcia. So we had the threat of additional 10% tariffs and $300 billion in goods and services, not already tariff. China goes into, to allow their currency to go 7-to-1 with the dollar. And they backed off on that, and then we called them a manipulator, a currency manipulator. That feels like maybe the initial tool set, but what's next? Because it feels like the next blows are going to be a lot harsher.
Yeah, Charles, so how the United States responds to this dispute with China with our trade policy is going to chart the course of history for the next 50 years. And I believe that what the administration is signaling now is that U.S. companies have to get out of China. If there's a way, and we've been programmed to believe that everything has to be manufactured in China for things to be cost effective, and that's just not true. We've been programmed to believe that we ought not to distort the market by confronting China. That's just not true. We have to stand up to them, and I think that the move now is to incentivize in some fashion, perhaps with trade tariffs, that U.S. companies should be moving outside of China, moving to neighboring countries that compete with China. We have great elasticity here. We can purchase products and we can manufacture products from countries that are not engaging in some of these bad behaviors that China has been doing. So take a look at that option, but also take a look at what we do with the IMF and how we approach this whole designation as a currency manipulator for China. We're going to be watching the administration very carefully.
Now, Chris, that's intriguing and it's been brought up. And even in the first half of this year, China's become the #3 source of our exports, from following Mexico and Canada. But businesses, particularly large businesses, are going to say, what about that $1.4 billion consumer base? Are you saying it's worthwhile to give up manufacturing in China and also give up that large growing consumer base as well? Because that's $150, $160 billion a year we'd be giving up, something like that.
Well, if private businesses voluntarily decide to minimize their risk by looking for different sources in their supply chain, that's on private businesses.
I'm on the supply chain side. I'm with you on that. But I'm saying for companies that are selling products into China, and if there's any kind of retaliation, if China, obviously in China, the government and citizens are going to be pretty upset if we pull all the supply chain out, if their economy continues to crumble. What do we say for those businesses out there that are trying to sell to those consumers?
Right, of course. And we've seen that Larry Kudlow this morning talked about how we need to try to come back to the table, look for an amicable solution. Ultimately, we're not trying to find an Armageddon type of outcome with China. We do not want to eliminate that $1.6 billion consumer base. What I would say, though, is that if private businesses are operating in a truly free, fair, and reciprocal trading arrangement with China, we're going to need to also agree that it's not just the administration, it's private businesses that have to also voluntarily put pressure on China with how they manufacture. So, the both, as you know, are connected, Charles. But when and what point in history has appeasement of someone who's a bad actor worked out well? I can't remember the last time that's worked out well. So we've got to take action and confront them now while we have a little bit of cushion with this roaring hot economy. Yeah,
and it would be great if big business helped out more. We understand their margins could be hurt for a little bit, but long term, I think it benefits all Americans, including American businesses. Chris, always enjoy our conversations. Thank you.
Thanks, Charles.